this is Richard Campo from Rose Capital Partners. I'm putting this video together just to talk through some things you might want to think about if you're a contractor and you're coming to get a mortgage. So firstly, I'll look at a definition and how banks look at contractors. Secondly, the two ways you might be set up. And then thirdly, how that then drives the assessment of your income and ultimately what mortgage you can get at the end of it. So the first point around a definition. So a contractor by nature is someone working on a fixed term basis. It might be that you're working somewhere for 3, 6, 12 months and you get paid a day rate or a fixed fee. That's sort of quite broadly what it will be. Now, when you come to get a mortgage, contractors generally need to have experience in what they're doing. So it doesn't mean you necessarily have to have experience of contracting as such. So for example, if you're a project manager and then you're doing that for 5 years, but then you take a fixed term contract, a bank will say, well, actually that's continuous to your line of employment and your expertise, so we're happy to work with you. If you're working in different fields, then you probably had to have a much stronger track record of contracting as such, so moving from contract to contract to contract. Now, ideally, most banks want to see you have a contract renewed, but again, that's not essential. As I say, some banks will do it on your very first contract, some will want a track record. That's when you get right down into the detail of what banks you want to use and why. So things like your CV, if you can share that with us, that's really, really useful, because then we can very quickly ascertain as to what bank's going to be good for you. So that's sort of the definition that you'll fall into this world. Now, secondly, then will be the way you might set yourself up. So some people work as a limited company and some simply be a sole trader. Quite typically, people are limited companies. It's going to make sense to do so. And most people as accountants would recommend they do that. Now, if you are a limited company, then your assessment falls down sort of two areas. Now, the first is the more simplistic, and this is what a lot of banks approach, and why it's actually quite positive to be a contractor, is that they take what's called your day rate. So if you're being paid X amount a day for a period of time, banks will work that out probably in the following way. So let's pick a really simple example. Let's say you get £500 a day and you've got that for a 6-month contract. So what a bank will do is say, right, you get £500 a day, so 5 times 5 is 2,500, but then they'll apply that to say a 46-week year, so not 52. They allow for breaks in contracts, Christmas, holidays, etc. Now, some banks do a little bit more, some banks do a little bit less, but 46 weeks is the market average. So let's complete the maths on that. So if you get £500 a day, that means a bank will assess your income at £115,000 a year. Now, that's really quite advantageous from an assessment point of view because it's really simple. It might be you earn a little bit more, a little bit less, but just in terms of assessing for a mortgage, that's probably the number they're going to come to. Now, whatever your day rate is, you move that around, but that's broadly going to put you in the right ballpark. Now, secondly, you might, because I said you might be set up as a limited company, then you might actually want to be assessed as a limited company director. That's absolutely fine. So if you do that, what banks will look at is one or some of the following, which will be things like your net profit, your salary, your dividends, or your profit on ordinary activities before tax. So one or some of the following. Now, for not everyone, but for some people, it works out better to do the day rate, because if you're a limited company director, what you're probably going to do is put all your business expenses through that, because it just makes sense to do so. It's very tax efficient, because for probably 99% of the time, you want to minimize your tax. So you completely get that. So your net profit or your drawings out of the business may not be reflective of your capacity to borrow. So that's why banks know that. They live in the real world. That's why you have those two branches. So again, depends what world you fall into and how much you want to borrow. If you want to borrow a modest sum, probably doesn't matter what path you go down. But if you want to push the boundaries, the day rate generally gets you a bit further along, but not exclusively. So once you've done that sort of assessment, so you fall into the world, you've done the assessment, then what will banks offer you as a loan? So they'll offer you around about 4.5 times your income. Some banks will go as far as 5.5. And again, once we get into the nuance of this, it's around, for example, if you've got large dividends you're taking, some banks will gross up dividends as well. That's where the limited company route might work. Sometimes the day rate route might work. So depending on which path you want to go down, once you get that, most banks say on average 4.5 times income, maximum 5.5. So if you're somewhere in that ballpark, if you look at what your day rate is, your net profit, or how you're paying yourself, and apply that those maths at the end, that'll get you broadly to the ballpark of the loan amount that you can borrow. So for much more help in this, as I'll sort of rattle through that quite quickly just to sort of go through the key things you need to think about. But if you all want to go down this path and you sort of feel you fall into this world, please do talk to one of us. There's a number of ways of making this very, very painless for you, because obviously you're busy doing what you're doing. That's the whole point, where you paid a high day rate to do what you're doing. Let us take the burden, do that assessment, and make sure everything goes smoothly for you, because what you really don't want to do is start applying for a bank, go down one path, and then it differ at the last minute. Maybe you can't get the loan amount you want, or you can't get a document together that a bank wants. You don't need that. So let's get us on board and make life as simple as possible for you.